Next question. Let's go to the next one. What are the key components that make up a consistent, profitable trader, excluding how you choose to enter and exit the market? So David Brooks, I think you're here, David. Oh, we've got some questions about copy trading. I'll come back to those. Yeah, we'll answer this because David's here. So what are the key components that make up a consistent, profitable trader? Where do you start? Number one would be your ability to deal with losses. If you ask Kerry as well, she'll say the same thing. Martin, the same thing. It is literally your ability to deal with losses. And this is why Traders Support Club is a close-knit community, and it's not one of these training companies that's got 50,000 people with it, because that doesn't get bums on seats in training. But it's the truth. It's ultimately, it is your ability to deal with losses. Does that make sense? Give me a yes, guys, if that makes sense. And if you've experienced that. Now, the trouble is traders have different personalities, David. So some traders will deal with losses in different ways. And you're going to learn this on week 4 of the Kickstart, which is coming up next week. So some traders, when they lose, this was me, the drivers what they'll do is they'll try and out trade the market. It's what's known as revenge trading. So they'll double up. So if they're risking £1 a point or 1% per trade, they'll risk 2% per trade. So what they tend to do in those scenarios is try and outperform their losses. So the way they deal with losing is they double up, they take trades. And a really good way of knowing whether a trader's doing that is you can look at their average number of trades per day or week. And if they hit a losing run, and often there's a threshold. So for some traders, it's 2 losers. Some traders, it's 3 losers. Some traders, it is 4 losers. All right. Yes, Barry, it is. So what happens in that scenario is when they hit their trigger point, often those traders will double up. So they'll start risking 2% a trade or 4% a trade. So they try and out trade the market. Whereas the more analytical guys and girls, when they hit their losing threshold, a lot of them will stop trading and go and look at their data because they think something must be wrong. So they will look to try and sort it. Or the classic one is say strategy doesn't work and they'll trade a new strategy. Has anyone here done that? You've gone, oh, that strategy shit that I bought off the internet. And then they come and tell me that and they expect me to go, yeah, of course it was. Well, I don't know. But what you should have done was tested it over the time period that you want to make the money over. So part of the way of dealing with losses, whether you have the natural tendency to try and out trade the market or you have the tendency to overanalyze when you lose, is you need the data to be able to understand whether or not that loss that you're going through is typical performance for that strategy. Does that make sense? So data will help. So one of the things is dealing with losses. So it's confidence. So we know a gentleman, a few of the guys here, my business coach, that says the number one thing you've got to do is in business is protect your confidence. And a lot of people say, what's the number one rule in trading? And it's protect your capital. And that's bullshit. Protecting your capital is not the number one rule in trading. The number one rule in trading is protecting your confidence. Protecting your capital should be a given. If you're not protecting your capital, you shouldn't be trading in the first place. But it's actually protecting your confidence. So part of that comes down to how you approach the market. Do you energy, all the things that an athlete would look at to optimize themselves. So for me, the best way to build confidence is internally and externally. The best way to build confidence about what you're trading externally is data. The best way internally is to keep your mind on point. So a good one for a lot of day traders is meditation, or making sure that your routine allows you to be energized, not drained, if that makes sense. I've literally worked with traders. This was years ago when I used to mentor people one-on-one. And all I've told them is stop drinking coffee after 9 o'clock in the morning. So they would pummel down 6 or 7 coffees, and that would literally impact how they would trade because they would end up being too aggressive. So there's little things that you can do. Some people are better off, even as day traders, spending less time in front of their screens. So they might trade from 9 in the morning or 8 in the morning till 1 in the afternoon, but those traders need to walk away more regularly than other traders, because if they sit for too long at their screen, they get bored. So it's very much a personality thing that will drive that in terms of what you do. So I would say dealing with losses, your ability to extract and work through data, and also your ability to be process driven. So yes, you're all here to make more money. Yes, you're here for results, but it's the ability to be process driven. And lastly, I would say long-term perspective. So if you can do that, so it's most of the stuff is mindset orientated. Yeah. I would say the external one that influences that to the biggest degree is data, which is why that makes up one of our 4 pillars, and why on Kickstart you spend time on it on week 3 and you revisit again on week 4. So next week, because you did data this week on Kickstart, when you do the mindset with me next week, you'll see how the two interlink, because data is important whether you are data orientated or not. It's just you don't want to, you've got to get the right balance. All right. Does that help a little bit, David? Does that answer it? So it's prime. If you were answering it in one word, it'd be mindset. But I would say externally, it's data. Internally, it's actually energy, especially if you're a day trader. All right. Now, I missed a couple of points. I'm just going to come back before I go on to other questions. Rush, I'm going to answer your question. I'm going to answer that one there.